Good afternoon, Miguel Osio with the Winston Minute, a report at the market's close. And today, markets largely flat, the Dow being down about 30 basis points, the Nasdaq up close to the same, about 25 basis points, and the S&P actually finishing up at zero. So today, what we observed, and some comments from friends and colleagues and some clients, is that folks are reassessing. They're looking at the previous first quarter. It happened to be one of the best performing quarters of the decade, believe it or not. Especially, we saw in emerging markets having sort of their last minute strong performance, and that bounce coming off of December's sink. So a lot of people reassessing. There's also kind of a 50-50 divide on where the global economy is, with mixed data coming out sector by sector in Europe, mostly positive data coming in the United States, but no sign of inflation, and the Fed's still sort of behaving, and I wouldn't call it a stimulating way or market stimulating way, but definitely accommodating. I would call it for now. So their confidence in the economy is cautious. So that's what we saw. That's why we saw markets a little bit mixed. We saw treasuries actually also rally, and then the pound, out of notable currency movements, was down as Theresa May reshuffles. I don't want to jump into Brexit. We'll have to change this to the Brexit Minute eventually if I keep on it. But essentially, not too much development. They might cut a deal with the Labour Party to move it along. It seems that Parliament wants to, cut a actual Brexit deal, a constructive Brexit deal, and not fall into the last minute hard Brexit, as they call it. Now, within the Dow, that was the only equity market that we followed that was down. We saw Walgreens Boots Alliance have a tough go after they reported. Apparently, their earnings were impacted by their pharmacy reimbursements. If you're familiar, Walgreens Boots has entered into the insurance space and has also been acquiring a lot of smaller companies. So it looks like they're really trying to diversify their business. And they were punished for how they managed, the pharmaceutical reimbursement element of it. I can imagine that it's sort of a tricky practice if you're new into the business, despite, having the resources and knowledge base that Walgreens have. But investors weren't happy, and we saw that sort of trickle throughout the Dow. Now, in the Nasdaq, tech shares up higher. Good data coming out of China. Good productivity and economic data here in the U.S., and a lot of hunger for these incoming tech IPOs, Lyft, Uber, and enthusiasm for big names, Netflix and Amazon. So we keep seeing that Nasdaq and these tech companies very sensitive to rates news, U.S.-China news, economic data, employment data, you name it. So they tend to be pretty sensitive to that. The only other thing I have for you is the Stock 600 index had a decent rally. If you were listening to us yesterday, we were talking about that positive manufacturing and production data coming out of China, and how that can spill over into investor sentiment, or at least investor confidence in European manufacturing sector, particularly within Germany, that takes on a lot of the very specialized manufacturing processes, especially with chemical treatments and custom tooling and custom machining and hand manufacturing, handmade industrial goods. So we saw that spill over, and it seems that folks reacted and they dipped into the more liquid assets that are exposed to that, the European car makers, and we saw that push up the Stock 600. In Asia, now that we're touching into that time, most of the Asia benchmarks finished unchanged. Japan equities slightly down, Shanghai and Seoul positive. So we're still seeing positive momentum over in China and the East. That's all we have. Catch up with us tomorrow. And once again, at the market's closed. Take care, everyone.